Hi, everyone. Welcome to another call. I'm really excited to have Steve Waygood from Aviva Investors here to give us an excellent interview and tell us a little bit about his work. Really excited to have you here, Steve. And thank you again so much for sponsoring the toolkit. We're really appreciative of your support of Oikos International.
Stephen, thank you very much for the invitation to be here. It's an honor to be able to share some ideas and a great pleasure to be working with you on the program, which I think is absolutely excellent. Making sure that we have a good pipeline of forward-thinking individuals who can make the most of their careers in sustainable finance is in everyone's interest. So I'm really proud that we've been able to help you deliver what you've done. I've seen what it's been building, and this toolkit looks fantastic. So congratulations to you and everyone involved.
Thanks, Steve. And we also have on the call a few of our participants in the toolkit, and they'll be asking you some questions, Steve, as we go through the interview. But I'd like you to first tell us a little bit about who you are and what you do at Aviva Investors, and sort of paint a picture of what the industry is for you.
Okay, so I started at Aviva 15 years ago. I started my career in sustainable finance at WWF 25 years ago, and I've worked in pretty much all the disciplines that sustainable finance can offer. So I've looked at negative screening or avoidance. I've looked at thematic analysis and preference and how you invest in solutions technology. I've worked as head of engagement, and as part of that looked at the voting approach that we have adopted. I've also been helping build things like the UN Principles for Responsible Investment, Sustainable Stock Exchange Initiative, the World Benchmarking Alliance, the Corporate Human Rights Benchmark. Those all we helped catalyze, helped others catalyze too, over the course of the last 20 years or so. It's been fantastic. I've loved it. But the thing I've spent most of my time on is what I would now consider to be macro stewardship, which is an unusual phrase and one I'm sure we'll cover in the rest of the questions. So that's a little bit about me, where I started and what I focus on now.
Very interesting. And yeah, I mean, for students who are in this space, there is so many initiatives happening, really pushing us forward and helping to transform our economy. I guess one of the things where we could start is like, where do you see this going, given your long track record and where things have progressed from? Where do you see the industry going now?
Right. So it's taken about 40 years to get to where we are today. If you really go back to where negative screening first started evolving, which came out of the religious community, particularly Quakers. This is a bit of a UK-centric version of it. I mean, I could go back to the Industrial Revolution and how individual campaigners started to use shares to campaign and affect change. Annie Besant, famously among them. But I think the last 25 years, it's very, very gradually, very slowly managed to permeate the zeitgeist within finance. In the last 2.5 years, I've seen more change than in the previous 22.5 years. It's been absolutely parabolic in the kind of growth that we've seen, not just in assets under management, but in interest, coverage, challenge, intellectual areas of thought that have been developed afresh. And most interestingly for me, we're now seeing central banks, finance ministers, heads of state all take this seriously. And the European Union, of course, a few years ago, kicked off their Sustainable Finance Action Plan, which I'm very proud to say that Aviva Investors had been engaging with the European Union for 4 years before it kicked off the high-level expert group to try and get it to do just that. And then I served on the group, and we had a Sustainable Capital Market Union set of proposals, which we've shared with you, and I'd encourage you to include alongside this. And pretty much all of our big ideas ended up in the action plan that are being in action today, which makes sustainability, if you're a financial institution in Europe, your compliance team is spending most of their time focusing on this right now, which is a good thing, I think, because there's a huge amount of change required. So it's a little bit of an answer to your question, Stephen. Back to you.
Yes, I would totally agree. From our conversations, even with Karen, who's on the call here with us, this is something that we're dealing with at all levels of
Mm,
having to integrate this regulation and changes within the sector. Um, there's a level of complexity that is changing, right? Making these jobs harder, but ultimately for the benefit of the planet and of people. Um, do you think that we're moving quick enough, though? Do you think that this parabolic change that has happened over the last few years is going to get us where we need to go, given
mm.
the where climate change is within our lifetime is going to dramatically affect us?
Mm. So the next 25 years need to see an increase in the growth rate that we've seen over the last 2.5. So we're not yet heading in the right direction at the right speed to deal with, for example, the 2030 agenda, as it's called, the Sustainable Development Goals and the Paris Agreement. It is absolutely the case that the markets are failing to integrate sustainability to the level necessary to ensure that the cost of capital of companies reflects their full cost to society and the environment. And that's because, I mean, you will all be aware of the concept of externalities in environmental economics. A significant proportion of sustainability issues remain externalities. And as a result, we currently have a global economy and most national economies, which, because markets haven't been corrected, they lead to suboptimal outcomes over people's conventional time horizons, not investor time horizons, but your life, your generation, your future. So I'd say that the industry is pretending in many areas to be sustainable. It's pretending to use money to change companies to the extent that they need to be. And I think those that are actually doing that are very few and far between. Mm-hmm. There are some, but for the most part, I think it is actually taking ESG data, integrating it into an investment process to exploit market inefficiencies to maximize long-term risk-adjusted returns. And that's a sensible thing to do as an investor, but that's not sustainable. That's just taking ESG data and using it to exploit the information advantage. To be genuinely responsible, to be genuinely sustainable, you need to be investing in a way that meets the needs of the present without harming the ability of future generations to meet their own needs. That's a really high bar, a really difficult thing to be able to prove. It's almost impossible, in fact, to prove. And I think the biggest challenge of all to our industry over the next 25 years will be proving that, as well as being good stewards with the individual businesses that we own, we're also good stewards of the system itself. So engaging with politicians and policymakers, highlighting where the markets are failing to deliver optimal outcomes for society, maybe sharing some ideas about how they could correct these market failures, tax, subsidy, emissions trading schemes, standards, directives, consumer awareness and education campaigns. There are a series of other tools that are needed to internalize the externalities so that the full cost of capital does reflect the full cost to society and the environment. And we need a new paradigm of partnership between long-term sustainable asset owners and managers and those that shape the rules of the game, the central bank governors, the finance ministers, the individuals that do the regulation, the politicians and policymakers, who by and large don't understand markets, but do have the ability to shape them. Those of us that do understand markets, but don't have the ability to shape them, should work together with them for all our interests, because at the moment, the current structure of the market is, as my daughter said, who is 11, by the way, after I explained what we did. And she watched a film called Our Planet Too Big to Fail, the WWF Netflix film. And she said at the end, and after we'd have a conversation, she said, "Daddy, does that mean money is destroying money?" And that's exactly right. It took her 5 minutes to realize something that it's taken me nearly 30 years to realize and put that crisply. Money is currently destroying money. If you look at it over a century, the current structure of the markets will possibly topple civilization. That's a pretty profoundly negative thing to be able to say with the science supporting it. It's not hyperbole, it's true. So that's the scale of the challenge. So the answer to your question, Stephen, is no. We don't yet have the pace or the scale of action, but we do have a level of interest that's unprecedented and some very powerful people that are listening.
Absolutely. And I'm really excited to look forward to what may come out of COP and what will continue to happen from like this political pressure. And for me, one of the most powerful SDGs is the one on partnerships, which I think directly relates to what you're saying of how we really have to bring all of this together if we're going to be able to transform our society. So we're not just focused on maximizing profits or using ESG in a way to do that. So speaking of the interest from our group, maybe it's a good time to bring in our participants here and see if they want to jump in and ask you some burning questions that I know they might have on their minds. Karen, do you want to jump in?
Sure, I can start. So I've heard that in the UK, they're kind of developing their own version of the SFDR, the Sustainable Finance Disclosure Regulation. And it's going to be based on the Task Force Climate Disclosure, the TCFD. And I'm just wondering, like, how is Aviva approaching that? And from what I'm hearing from you, like, I mean, it seems like you were very involved, or not you, but Aviva was very involved with SFDR. So they probably are very, I already know what's going on for that.
We're following it very closely. I'm also on the TCFD and have been since it was conceived back in 2015. And actually, the TCFD is much narrower than SFDR. So it might start with the climate issue, but it can't finish there. Honestly, I think SFDR is confused and confusing, and its original incarnation was impossible. Particularly in biodiversity, there were a lot of suggestions that we would be disclosing underlying impacts that we had no data on because no company ever disclosed any of it. And because they couldn't measure it itself, it was quite odd. Anyway, I think post-Brexit, the UK has to come up with its own approach. And I think I'm right in saying that the vast majority of financial institutions in the UK have said, please just adopt SFDR. It's confusing enough without you coming up with something else. And if we're going to actually have some kind of approach that's passported into the European Union and we can distribute across there, we don't want a kind of modestly different approach that's just going to cost us time and effort to comply with. So we're advocating for consistency. Incidentally, it was Brexit that led to the high-level expert group being set up. We've been advocating, as I mentioned, for some time, that Brussels developed a package of sustainability work, and we christened the Sustainable Capital Market Union to embody that concept. And it was only when Lord Hill resigned from the FISMA, where he was the Commissioner, Financial Services and Markets Authority, and then we had Valdis Dombrovskis step up from Latvia. It was only when that happened that Valdis launched the high-level expert group, the commitment to make the capital market union sustainable, and that was 2 weeks after the Brexit vote. So the only silver lining I can personally find for the Brexit cloud is the high-level expert group and the action plan and the vast body of work that they've produced, which I think is fantastic and has led the world. Japan is following a similar suit. Canada's ahead of them. You know, we know that China's been looking at this more than ever. You know, there's a lot of work being undertaken in Singapore too. So it's Europe that actually did this first. And Juncker and his cabinet, we had a meeting with his chief of staff in his first week of office, which was just incredible, to propose all of this. So it wouldn't have happened if it wasn't for Brexit, I discovered afterwards. How about that?
Crazy. Stephen, I'll let you.
Sophie or Denise, would you like to jump in?
So I'm interested from an investment point of view, what would be your tips on where to start in terms of sustainable investments? Because there's so much information out there. I would just be interested in your perspective on things, on yeah, what's where to start right now.
Yeah. The PRI, the UN supported Principles for Responsible Investment, have an online course, which is good. I think it's a few days work. Then you've got the CFA, Chartered Financial Analysts. There's a curriculum that they've been building. It should by now be embedded in the main exams, but there has been a post-examination approach for those people in your network that have the CFA, which itself is sort of master's degree scale if you embark upon the CFA. But those are two obvious places to start. For those of you who are already in investment, in finance, and have access to the vast amount of data in the broker world, there are various investment banks, HSBC, UBS, Citi, JPM, etc., who all now have specialist teams who focus on ESG and produce investment research that either has investable ideas, concrete recommendations of buy, sell, or hold, or short securities, or they might have. It often happens that the individual brokers will have tools that help brokers, buy-side analysts who are looking to initiate coverage on a particular sector. The sell-side broker will often offer a primer, and if it's not written, they'll give you help and support after you've got into a financial institution. And then, of course, there's Bloomberg itself, which is a massive world of data. For those of you that don't have access to Bloomberg or the broker notes, and often the libraries within the academic institutions should have Bloomberg. If it doesn't, in fact, tell the library to apply to Bloomberg, and they will often give away a terminal, because it's in their interests, of course, that people who ultimately end up in financial institutions demand the terminal. There are various other places that individuals can go to build their competence. The social investment forums in different countries are also very good places, and the PRI has an academic network. So there's a lot of information freely available, and as Aviva Investors, we've supplied Stephen with a large number of course content and videos and some various case studies for use that everyone can kind of use, Sophie. So I hope that gives you a few different ideas for both academics as well as young analysts.
Definitely, thank you very much.
Pleasure.
That was really useful, Steve, and a great plug for the toolkit, where students who are watching this right now can go and check out some of these resources that we've linked to, including these trainings from USSI, from the Sustainable Investment Forum and the PRI. So Steve, thank you for that. And we will also go and check out the continuing education programs that Aviva has developed to include on the toolkit. We're getting to the end of our interview, Steve, so I'd like you to end off with telling us something to inspire us or motivate us as young professionals going out into this career. What can you leave us with?
Do not let the lack of ambition be the thing that holds you back. Dream massive, not just big. Dream as big as you possibly can in terms of what it is possible to do with a career. And Stephen, you mentioned the Sustainable Development Goals about 5 minutes ago. And we produced a roadmap for sustainable development back in, I think it was 2013. We've shared it with you as part of the collateral for this interview. We then shared that with various people within the UN. I think we must have taken about 10,000 copies to various different UN meetings in different parts of the world. And it culminated in our group chief executive being invited to speak at the launch of the Sustainable Development Goals in the UN General Assembly in the opening session of the Intergovernmental Intersessional. And that's the first time any chief executive of any company, let alone any financial institution, has ever addressed the opening session of the General Assembly. He spoke an hour after the Pope and before Obama, and we were in the room. I was in the room having written the speech with him when he gave the address. And in that address, not only was it incredible being there at the signing of the SDGs, which was a culmination of years worth of work by literally hundreds of thousands of people. So euphoric meeting, literally, and thousands of people in the General Assembly chamber, and he was speaking to them all. We also called for a resolution on sustainable finance being produced by the UN, and then the Secretary General to convene a group of chief executives to actually bring together the financial community to deliver this. And we also called for the creation of a benchmarking initiative. All three of those things subsequently happened because we then made sure we then delivered the World Benchmarking Alliance, which I mentioned earlier, and used the United Nations as the platform to build that. And I think it was then in 2018, when the United Nations Foundation gave Aviva the Company of the Year award for the work that we'd done. And I know everyone talks about awards, but they literally could have given the award to hundreds of thousands of different companies. And they chose us as the only recipient of that award that year. And being there to collect it at the UN Foundation meeting was just incredible. So I'm also very proud that goal 12.6 in the SDGs exists in part because of a campaign we led at Rio Plus 20 in 2012. And one or two of the paragraphs in the outcome document of Rio Plus 20 include discussion of corporate sustainability reporting and the need for integrated reports to be produced by companies. So this is what I meant earlier by macro stewardship. Think big, think systems change, think how do we align markets to the delivery of the SDGs and the Paris Agreement? Because at the moment they're destroying both. And that, I think, Stephen, is probably the place to finish. It can be done. We have to harness markets. And I'm very proud to have been involved in some of this already, but we haven't finished, or even slightly. We've only just begun. And it needs the next generation of analysts and sustainability professionals to dream even bigger, to actually begin to harness markets in a way that delivers the 2030 agenda. I hope that gives you a sense of inspiration, Stephen.
It does. It really, really does. And it's reason for us to continue to lead learning and pushing forward to help transform the market. So thank you so much, Steve. I'm definitely going to dream big tonight and going forward.
Thank you.
Cheers. Have a good day.
And you all. It's been fun. Speak again soon.
Thank you so much, Steve.
Bye all.